to better understand this hot topic on digital currencies, we're going to bring in Jiaying Jiang. She's the assistant professor of law at the University of Florida, and she was at the panel on crypto. Welcome to the show. Good to see you. What were your, I guess, takeaways from this particular discussion? And I phrase it in a sense that what made crypto appealing was that it wasn't regulated, yet we're now talking that everybody seems to want regulation.
Yeah, sure. I think our panel responds to the 9 elements the IMF has proposed to its member countries on how to come up with the most effective crypto policies. I think my 2 biggest takeaway here is, one, the current regulatory approach is a mess. Sorry, I cannot find a better word for that. I can give you a few examples here. For example, here in the United States, regulation is so fragmented and different regulatory agencies have their own approach. For example, the SEC treated cryptocurrency as a type of security, and CFTC treated it as a commodity, and FinCEN says, well, you need a license in order to operate as a crypto business, and IRS say, well, you need to pay tax because it's property. So it's a mess, and for crypto companies, well, sometimes they need to comply with all these regulatory agencies. And in other countries, one of our panelists just say China is ahead. I actually don't agree with that, because China, as many audience may know, that cryptocurrency is for a few times already. And I would say this approach is not an effective approach to achieve regulatory goals. So what are regulatory goals here? We can say, well, in order to protect consumers, to combat money laundering, but look at the result. The result, there are still so many people use crypto for illegal purposes, and then the consumer protection is not great. I can give you an example here. When China banned crypto trading, and a lot of crypto exchange, they just moved overseas, moved to Japan, moved to Malta, and register, but serve the same group of people as Chinese consumers, and they're exposed to the same kind
of
risk.
Right, but under how you just described it, it almost doesn't matter which country regulates. Either we have a global sort of playbook and rules that we're all going to follow by, or we don't, because you could move from one country where it has stiff regulations to one that doesn't have regulation, and it dilutes the whole protection that you're trying to give to consumers or investors. I mean, that's where I think the problem lies, is there's no global organization to take this initiative to structure something that works for everybody. Yeah.
That's exactly right. And actually, that's the second biggest takeaway I have. We need international collaborations. And at least, for example, we need clear KYC rules, AML rules. But the problem is different countries have their own policy goals. It's so difficult to collaborate on that, but it's necessary.
So, okay. I have been following Bitcoin and digital currencies now since the very beginning. And I was, for the record, skeptical from day one. But for our viewers who may not understand what digital currencies really are, answer me this. Why do we need a digital currency? What's wrong with the regular currency we have, whether it's the dollar or the yuan or the euro or whatever it may be?
Mm-hmm. So when you say digital currency, there are 2 types of digital currency right now. One is a cryptocurrency that we talk about, Bitcoin, Ethereum, etc. There are 20,000 cryptocurrencies right now in the market. And the other type of digital currency is called central bank digital currency, which are issued by the central bank. So in terms of why do we need that? Well, first let's focus on cryptocurrency. Why do we need cryptocurrencies? At the very beginning, well, when Bitcoin was proposed in 2009, the idea is we can bypass all the intermediaries to reduce transaction cost. And I think that's a great idea, but so many other cryptocurrencies, just take advantage of the hype, and then it's, it can be created out of thin air. The value is, I don't see any intrinsic value in it with regards to a lot of other cryptocurrencies. And in terms of central bank digital currency, why do we need that? Well, I think a very good comment I've heard at this moment is it's a solution looking for a problem. I do not necessarily agree with that. I understand that many central banks right now, actually I can give you the data, it's about 80 plus central banks representing 95% of the global GDP are experimenting with CBDC. There are a few reasons. They want to see whether central bank digital currency can enable financial inclusion. They want to see whether CBDC can reduce transaction costs. And then there are, of course, some geopolitical implications here. For example, whether we can avoid sanctions, use CBDC to avoid sanctions.
Well, you open up many other chapters of discussions that we're going to have to save for another time. Jiaying Jiang, really appreciate your analysis on this. And yes, let's continue this discussion next time. Thank you very much and have a good weekend.
Sure. Thank you for having me.